Okay, start recording, share my screen. All right, let's get into it now. Okay, so like I was saying to myself at the start, today we're going to be going over ranges. So we're going to be breaking down kind of like the last 2 weeks of price action. And we've been ranging on Bitcoin and the indexes as well, which has given a lot of good confluence for these ranges. But I know that ranges typically are some of the most difficult price action for people, myself included, when I first started trading. Like ranges were just very hard to identify, first of all, like an accurate range, and then also just to like understand where to trade around and how to not get chopped up in a range. Because that's what ranges are great at. They will come after a period of trending, right? Like the market's kind of shit right now, so it's like, this is kind of a trending move we get. And then we'll range between two value areas. And what you want to do in a range is you want to always look to operate at range highs and range lows. And 100% you want to completely avoid trading in the middle, because that's how people will give back so much of their profits. And I used to do this too. Like a trending move, like, a lot of alts and stuff were moving nicely. We kind of came off the bottom here, obviously, of the market. So like we had a nice bounce across everything. And then we've been ranging for all of July so far. Now, if you're not operating under like normal range mechanics for the most part, like obviously there's always outliers, you're going to get chopped. So anyone who's like trying to operate within here and, choose a side, try and like get long, get short, switch their bias and stuff, that's what this chop is designed for. So ranges do require a lot more patience, and that patience comes waiting for range highs and range lows and then avoiding everything in the middle. So I was saying before when I had my mic muted, like how many of you guys struggle trading ranges, find difficulty in identifying clear ranges, things like that? Just let me know in the chat. Like I said, ranges were one of the worst things for me trading back when I started, and the market ranges, I think there's a stats like 70 to 80% of the time. So it's like majority of the time we are going to be in a range in markets, and so it's very important to understand A, how to identify them, and B, how to like properly trade around a range, because you can chop yourself up aggressively if you don't have patience in a range, for sure. And the Woodsbot indicator is literally the only tool you need to give you like accurate levels to identify a range. Like it's absolutely beautiful. I'll show you guys a few, like lit example here. Lit has been in this like 20% range. And if you were operating within this range, like you could have caught a lot of nice moves, and you could have caught a move like once every 2-3 days, every 4 days, and just chilled for the rest of it, right? And I'll show you guys, like we'll break this down, but it's like even with the indicator, you turn on the 1 hour divs, you literally have touch points into range highs and range lows with crystal clear execution triggers to take all of these trades. And like I said, it's like, one trade every 3-4 days is really all you need when we're in a range. Those are 20% moves. You could have absolutely printed just on this. This was a trending coin, lit. This has been extremely strong. It's like a hype style competitor. And so this has been a coin that, it's been on everybody's radar. And very simply with range trading mechanics, the indicator showing you range highs and range lows, as well as execution triggers, you could have traded this range flawlessly. I didn't catch a single trade on this, right? Hindsight's always 20/20, and it's a lot easier to look at a chart and say, okay, like look at this, but like, this is why it's important for us to get on these streams, for you to back test, for you to like identify ranges on your own, go back and look at the triggers that were there. So in the future, you can, start to operate with these types of trades within a range. Yeah, no, I appreciate it, Vlad. Kirby too, I think, called it out. No sound. So once the range forms, it is easy to see, but the question is, for how long will it stay there? Yeah, it's a great question. And it's like, there's a saying when it comes to range trading that you just trade the range until proven otherwise, right? So it's like the point of a range is that these levels are where buyers step in here consistently, and this is where sellers step in, and people will trade the range, right? Like they'll sell here, buy here, or short here, buy here, long here, short here. And you never actually know how long a range is going to stay. And that, like, you're not really supposed to, because you're supposed to trade the range until proven otherwise. And so proven otherwise, this is what's called a deviation. So it's like, you can see that like touch points into the range high and range low, like very clear rejections, right? Wicks, it's very clear. When we start closing above is when a range is actually being broken. But when we close above like this, but fail to hold, and then we push below, and you can see this beautiful retest. Woods in Wealth Group shorted this retest here. This is called a deviation, right? So this is when we deviate the range and it's a false breakout. Longs get trapped up here, and then we accept back into the range, and you can expect a move to range lows. Now, although we've been ranging, Bitcoin is extremely strong. We've had war escalations, we've had all this different shit going on, and structure wise, we are continuing to look very strong here, right? We kind of have this upwards channel. And so the market overall looks really good. If we came down and we swept into here, this would have been such a nice long, and this is what everybody was waiting for, right? You have so much liquidity here. You have Monday low, which has not been swept, right? Everybody in the world would have just been getting long if we reclaim this. It would have been almost too easy because it's too beautiful of a setup. Most likely we would have either just completely fucking blasted this and failed to reclaim and gone lower, or just if we're really strong, right? We're front running this because everybody wants this level. So even though we're ranging right now, price is strong on Bitcoin, and you can see that with the structure here. But you're supposed to trade the range until proven otherwise, because what a range does psychologically, hold on, I gotta sneeze. Oh, of course it goes away. Okay, what a range does psychologically is every single time price comes up to range highs or range lows, it makes everybody think, oh, we're going to break down. Everything looks like shit. We're going lower. You come up here and it's oh, we're going to break out. Nice. We're finally going higher. That's the psychology of a range. You come down here again. Everyone, once again, is waiting for the sweep of these lows or us to break down because we failed to break up. You come up here, this is why everyone got trapped on a deviation. Everyone's okay, we're finally breaking up. We're going to those 67K levels up here, right? And then we deviated. But that's what a range does. And it's you'll start to get used to range psychology, especially if you go and back test it yourself and look at ranges, put the Woodsbot levels on and everything, and just understand what it looks like at range highs and range lows. But it's designed to do that because it traps longs here, traps shorts here, traps shorts here, traps longs here, right? And smart people are getting long here, taking profits here and shorting here, taking profits. But we reverse in between here, and this is where everyone just gets chopped to bits. And if you can learn to trade a range really effectively, the best part about trading a range is that if you're getting long here and you're getting long here, right? You don't have to chase here, right? Obviously you're taking profits off at range highs. That's just a no-brainer given. If you're not, you're going to round trip, and that's just not how you trade a range. But ideally, if you're getting long anywhere, right, in range low area, you don't have to be the guy chasing and trying to catch the breakout. And the same goes on the opposite, right? If you're getting short on this deviation here, Woods did, and this retest, if price comes down to here, again, you're obviously taking profits. But if we do start to break down, you don't have to chase, because if we reclaim, blows all these trap shorts out, it gets difficult. So positioning yourself at range highs and range lows, again, it's easier said than done, right? In the moment, things are hard. It's hard to fully identify the range. It's hard to mentally operate around the range, because you'll see on Twitter, okay, we're breaking out 67K targets. You'll see on here new lows. We're probably going to go and take everything out down here, right? It's that psychology, and that's what a range is meant to produce. And then when price comes into this area, which is mid-range, right? You hear the expressions, don't diddle in the middle. And that's because when you operate in the middle of a range, it's uncertainty in the market, and it's designed to chop people to bits. This is where people lose probably the most money in trading, as well as chasing breakouts and things like that. And that's why having the patience inside of a range, to understand the levels, which we can get into now, it's as simple as just using the Woodsbot indicator, is really going to tell you where to operate around and, where to avoid. And so, we could range here for, like, I would say if we swept these lows or even just, these ones and reclaimed here, we could probably range for a while, a few more tests of range highs, range lows. But like, given the strength of like this kind of upwards channel we have going on here, right? Like, I think that we probably end up breaking up on Bitcoin. Like this, like, it's strong, right? So I do think that, because we deviated back into the range and didn't even take range lows, but we put in a higher low, I do think that when we come up to here, we'll probably sweep there and then like make a move higher. I do think we probably see some price action like that. But again, it's the weekend. And so if you want to understand how to trade a range too, I would say the best thing to do is to not necessarily just like start chasing here when we start breaking out, but it's wait for like some consolidation, some lower time frame price action that tells you we're going to hold this level, right? Like if we go and zoom into it, you can see divs into levels, right? Like we're extremely overbought at range highs. Like, it's not what you want to see for continuation. If we held this, right, and RSI actually, reset around the 50 and we continue to consolidate here, then we're probably going higher, right? That means like the 3 drive of bearish divergence didn't even break the level and we held. That's a good sign. But we lost the level, we came down, we broke structure on the hourly, and then we gave the bearish retest here, which was a beautiful signal. I didn't short. I should have, like, again, hindsight, and that's why it's important to do these streams and for you guys to backtest stuff. But this was perfect. This was picture perfect, right? We broke structure here, came down, gave a bearish retest of range highs after deviating it. Perfect short down to expect range lows or, a good move. But what you want to do, right, is like, ideally even our RSI now, right? Like let's say we come into here, we give an hourly bear div, like that's probably what will happen. And then, we hold and even put in like a higher low here, right? And then reclaim and RSI looks better. You get some like low time frame consolidation above range highs, a few 4-hour closes or something, then it looks good. The other price action that you can do is wait for us to like consolidate a bit, pop above the high, and actually give a retest, right, that like holds. So take this high out, come and actually retest, hold, then you can look for longs, as opposed to just like chasing in here and risking a reversal like we always get, and or a pop up and a reversal, right? So it's like, again, just patience with the range highs, because the same would go down here. If we swept all this, you're going to have a lot of people chasing to go short here, right? And it might work out, but the better move is to wait for like something like this, a retest here, and then you could go short. Because if we deviate just like we did here and price reclaimed here and goes up, all of these shorts are trapped and they're going to get blown out when we go back to range highs. So that's like kind of general rules and like ways you're supposed to trade the range. Wait for the extremes is another saying you'll hear, and that means range highs, range lows. Don't diddle in the middle, means like just avoid trading mid-range, and that might suck. You might have to wait a day or two because you missed range highs, but that's fine. Overall, you'll make more money taking 1 or 2 trades over like 2, 3, 4 day period, as opposed to switching bias, mentally draining yourself and chopping yourself up in the middle. So we covered a lot just there on like ranges in general. If you guys have any questions, if anything didn't make sense, if there's anything you want more clarity on, like, let me know. Entering on retests takes more patience, but you can have so much more confidence in the trade. Yeah, 100%. And like, that's what you want, right? You want confidence. You want higher confluence in a trade. Like you want a better risk to reward based on the setup than just your emotions telling you that like, okay, we're going to break out. And logically you look at it and it's like, yeah, we might be breaking out, but like we have 3 drives here. Let me just clean this up. We have 3 drives of bearish divergence, right? In overbought RSI. Like it's not the greatest look to continue higher. And if we look at volume, right, like, you know, volume's not like this here and just continuing to climb, you know, because that's another indication that like we could actually break out, right? If you have a lot of volume supporting a breakout, that's a good indication. If you have kind of waning volume and dead volume, and you have things like 3 drive of bearish divergence into overbought RSI, you know, it's not the greatest look. And a lot of people got long here expecting this to be the breakout. That's what this price action wants you to do. It's predatory. It wants you to get longs so that it can trap you and puke lower, right? That's exactly the point of this PA. And so you have to understand that, and you have to like navigate it better. And so like Kirby said, and like I was explaining, if you get a sweep of this, even if we have whatever, a divergence here, and then, you know, we hold here and like whatever, chop for a bit, this trade, and start, you know, changing structure on like lower time frames, this trade is so much higher confidence than taking something where like we look like this. And that's exactly what you want, right? You want to take trades that have better risk reward, even if it takes a bit more patience, because you don't want to lose money. You want to make money. And you're not going to make money every single day, especially range trading. It can be difficult. It requires more discipline. It requires more patience. But that's fine. You just have to understand the terrain we're in and understand how to trade it. And then your mental can be okay with waiting. Now, again, it's easier said than done. Like, you know, you can say this, but in practice, this takes years. It takes reps. It takes, you know, 100 ranges later to get it. It took me like 2.5 years to like really get range trading, right? Like these things are not overnight things, but you get them from going back, finding 100 coins with price action in ranges like this, putting on the indicator, mapping out the levels, and then seeing the reaction, what RSI looks like, the divergences, the reactions at range highs and range lows, and then you'll start to understand the pattern recognition. So that's like Bitcoin. And then if we look, like I said, lit was a beautiful range. Just clean this up. Like lit was a beautiful range. And what I suggest to you guys, if you want to learn to range trade and backtest, go and find levels like this, like I'm saying, right? Map out the levels, right? Even if they're not a confluence zone like this, right? What you can do is just like, I combine levels that are really close, especially when they're range highs and range lows, right? Like this isn't confluence zones on Bitcoin. The top one is. Let me just turn this off. So like this one's a confluence zone here, right? But you have levels here as well, below. And like I just combine these levels because they're like, it's, you know, this is where price continues to come into and reject from, right? And it's like, you know, so I'll put a little level here and a level here. Sometimes it'll be a singular level. Sometimes you'll have like 2 levels, 3 levels somewhat close together. And you can just kind of map it out from there. But lit was a beautiful, beautiful range. And this gave you the clearest triggers ever to take trades in here, right? Now, you don't know, first of all, that this one and this one are a range, because like your range has to form, right? And so you have like price rejecting from here and price bouncing from here. And then the next time that price comes up here, you also have these levels, right? So like you do know that this is a strong level price rejected from before. You now have, again, beautiful overbought 1 hour divergence into that range highs. That is picture perfect entry for a short here. And you can see what happens. We then go down and retest the same level we bounced from the first time, right? And again, now you have a oversold 1 hour RSI plus OBV div directly into that support, right? So if you were short from here, this is your trigger to probably take, well, first of all, this is like a 20% move, so you should be taking a lot of profits even on this way down. Like, this is a very nice sell-off. Extremely gets oversold on the 1 hour. You get your divergence, right? Like, you should most likely be flipping long, given that we held this level here before. The same reasoning you took a short here, that we rejected from here before, we've now come back up into this level. We are overbought on the 1 hour with a divergence. The indicator's giving you the triggers and the levels to execute this trade the same way it's doing down here, just inverse. And what happens? We bounce back up to range highs. And then what happens? You get the exact same thing, right? It's just copy paste, have your levels, look for the divergences on, personally, I use 15-minute and 30-minute. 30-minute for me is like the golden ticket. You can use 1 hour too. You have a 1 hour divergence. You have the chart screaming to you, right? Like, these are like buy and sell signals. If you combine them with the levels, this is how I view it, and this is how I solely trade, right? I strictly trade Woodsbot levels and divergences, ideally oversold or overbought. That is my strategy. It's what I wake up every single day and I look at the charts for and I execute around, because these levels are concrete. Again, these levels are pulled from 3+ years of data. So this daily level and this H4 level go back 3 years looking at data to give you these areas that are traded around with the most volume, support, resistance levels. But they also update with real time. Like, you can't eyeball levels like this. And the more you use this indicator, the more you'll realize just how insane these levels are, especially the confluence zones. So you get your levels directly from the indicator given to you on the charts. You don't have to do anything. And then you get the triggers, like the sell trigger, the buy trigger, right? You can look at them like this. Now, don't just blindly look at it. Backtest 100 trades to figure out, what types of levels and what types of divs work for you. But mentally, you can look at these things as like, this is the chart and the indicator telling you this is a sell signal. This is the chart and the indicator with the levels and the div telling you this is a buy signal. And inverse, on and on and on, right? Comes back up to resistance once again, into your levels that it rejected from before, your range highs, and the indicator gives you the sell signal, right? You could have shorted this. So you can kind of look at it like that, and the more you start to play around and backtest, like I'm saying, the more you'll get it. But yeah, beautiful range with beautiful triggers on every single touch for price to, reverse from, and for you to execute and operate around. So if anyone has any questions on like this lit chart, again, ranges in general, just let me know. And like, as always, like, I say this, like, there are no stupid questions. Like, quiet mouths don't get fed, right? Like, the reason I got to be a successful trader is because I was extremely active. And in Wealth Group, when I first joined, I was tagging Woods and chart ideas all the time. I was in his workshops. I was on his streams. I was just messaging him, asking questions. Is this right? Is this supply demand? Is this range correct? Should I enter here? And at the end of the day, it's like, that's why I'm trying to host these streams, because I want you guys to be successful traders utilizing the tools and the community inside of Woodsbot. If you have any questions on general trading, the bots, ranges, indicators, what I'm explaining, please ask, because there are no dumb questions. So the tool doesn't like create the range. The tool will have levels, and then you will find that price starts ranging between those levels, essentially. So if you turn the indicator on, right, you'll have all these different levels on all the charts, right? So it's like whatever chart you're looking at, you will have like your 4-hour levels and stuff. And so what I'm doing is just I'm charting out the levels that are marking out range highs and range lows and just drawing them on my chart. And then, you can go to other time frames and have those levels there. So the levels will be there. And what will happen is you will find that price starts ranging between two levels. And so, like, if we go up here, for instance, Like this was a range here. Let's see if there's confluence zones. So let me find like a good example. Yeah, like this is a good example of a range here. So you can see that, like, I'll just draw it like this instead of all the levels, right? So this is a confluence zone with levels, and then this is also a confluence zone with levels here, right? And you can see that price was ranging in between here for some time. And now, you know, the range we're in now is just retesting this range low, first of all, which like is, you can see why it's such an important level. But like if you go into price action over here, you can then do the same thing, right? Like the levels were there, and you can just map out that like price was ranging between these levels, right? Bit of a deviation, close to range lows, range highs, another deviation comes down, range lows. So the levels will be there. And it's just basically like you recognizing that, like, okay, clearly price is like, you can see it, right? It's just, it's rejecting from somewhere here and it's bouncing from somewhere here. And so you can just take the levels from the indicator, and this is how you can find those ranges. Map those levels out. You know, what are the levels that it's bouncing from? One or two of them, and then one or two of them up here. Put those on your chart, and then you'll have your range essentially. The same with lit, right? Let me just clear this. Right, so lit has been extremely strong, and it has levels here from the indicator. And so, you know, there are levels in the middle that you can operate around, right? You can see the reactions around these levels. But like, where do we keep rejecting from? These two levels here, I put on my chart and I put a box. And then these levels here, I put on my chart and put a box, so that when you turn it off, you can see your range low and your range high. So the levels are always there. It's just like price will start ranging between two sets of levels, and then you can put those on your chart and you can start to like operate around them basically. How would you find the best stop loss when looking to a range high or a low level? Yeah, so that's a great question. So if we come into, one thing you guys can do is use the Woodsbot levels for like the next level. There won't always be one. But for instance, like this range high here, like let me put 2.85. We have a level above, right? So all I did was just draw this level from the indicator here, so we can go to other time frames. So like when you come into range highs, for example, and you have like your hourly divergence. So a stop loss is always meant to be an invalidation, right? It's like you don't want a stop loss. Sometimes it will be to just be a static stop loss, right? It has to be something that invalidates the trade. And, you know, that takes a bit of like technical analysis and structural understanding, right? Because you want to have it again at a place where the trade, if price goes there, then your trade idea is invalidated, you know, and that means that the trend will reverse or the range will be broken in this instance, like things like that, right? And so let's just say, for example, this divergence here. So first of all, we didn't take this high, right? And so one of the ways you can do it is like highs and lows, the same I'll show you down here. But we didn't take this high, right? And if we reject before that, that's a sign of weakness, and this is a strong high. So you don't want price to trade above here. So that's like, if we start trading above this high and holding, right? It's like a structural change. We're like sweeping that high and holding. So we don't want that. So it rejecting before that is good. That means a stop loss. We do want it above here, but not right above, because that's like very small, right? But let's just say you were taking the short. We'll just say you took it at when the div confirmed, because it's an hourly. You would have had like an hour or two to get into this, right? You have a level above this, like this H4 level, like I was showing you guys. And you can use the Woodsbot levels to do this with. You can take trades at a level and put your stop loss at the next level. And so you could have done it like this, right? And you could have taken it like that. It gives you enough wiggle room that like I said, you don't want to put it above just this high, because price can still take the liquidity from here, right? Price can still wick up like this and then reverse after taking out all the people who have stop losses above here. And so it is risky to have it just above there because you could get taken out and then the move could happen. But having your stop loss at like the next Woodsbot level here gives you enough room that like price could even do this, right? It could come up, make another div and hold, give a little bit of a deviation, and you'd still be fine in the trade. And so stop losses, it's a common question, and like, you know, it'd be a good stream to do on just kind of like, you know, where do you place your take profits and where do you place your stop losses? Probably two of the most common questions that almost any trader gets, outside of, you know, how do I find an entry? And so there's a lot of different things that go into where to place a stop loss. And so that's why I'm saying one of the easiest ways that you guys can do using specifically the Woodsbot indicator is to just place your stop loss at the next level, right? Whether that's 3, 4, 5%. If it's like 3, 4%, like let's say the stop loss or the level was here, you know, I wouldn't place it right at it. I would give yourself like a 4.5% buffer on the stop and do it like that, right? So I just basically wouldn't put it like directly at the level because price again can test the level, right? Just give yourself a little bit of buffer room. And if you're newer to trading and you are unsure where to put your stop loss and stuff, you shouldn't be trying to get like the pico perfect stop losses. You should be giving yourself enough breathing room that like, you know, price can go against you and you'll be okay. And over time, you'll start to understand how price goes against you and how your entries aren't enough, like good enough, and or your stops are really good and price doesn't typically go against you because you're playing divs or oversold, overbought or whatever. And then you can start to adjust from there. But at the start, when you're beginning and you don't really know where to put your stop losses, my best advice for you is to just place your stop loss, like give yourself more room so that you don't necessarily get taken out as often because you're losing capital that way and it's stressful. It messes with your mental, especially when you're new. It gives you the ability to, like, even if price does go against you but then reverses and you don't get taken out necessarily and that continues to happen, you probably can then infer that your entries are not the best and you need to be looking for better entries and or just be comfortable with a bigger stop. But easiest answer to that is just use the Woodsbot levels themselves and you can put it at the next one above or below. That's the easiest answer. And let me know if that like answers your question, Frog. Mariano, yeah, for sure. I hope that I answered your question as well there. Good stuff, guys. I appreciate the questions, right? Because these are common questions in trading and range trading, and a lot of people probably have them and, you know, don't want to ask them or whatever. Like a lot of people wonder the same thing. So I appreciate the questions from you guys. And another quick example here, right? Structurally, you don't want price if it comes here to go below here. Again, right? Like if price trades below here and wicks it, that's fine. If price ends up closing below here and breaking this, like the structure's broken and also you're losing range lows. So if you were to take a long here, right, like here, there was no levels below, but I would just give yourself like a 5% stop loss because it gives you, again, the ability for price to do this. It gives you the ability for price to like you to be wrong. Maybe us take that liquidity and then come back up and put in like another divergence, taking this low out, because range highs and range lows will typically do that, right? Like it'll sweep the high or the low of the range typically, taking liquidity from one side going to the next. Doesn't always happen, but you can see that, like, you know, if you took the trade here, you don't want to put it right here because we could just sweep this low in reverse and like it's a 3% stop. Like just give yourself a bit more room, like 4.5 to 5%. And then it gives you the ability that like if price does do this, where we sweep and we take that low out and it chops like this, whatever, then the trade's invalidated, right? Like we've taken this low, we didn't have a reaction, and now we're rejecting range lows, and that's fine because now price is going to go lower. You're taken out with your stop loss because the idea is invalidated that we're going to go up, right? That's how a stop loss should act. It should be the thesis that price is going to bounce here and go higher is invalidated because, you know, we've taken this liquidity, we also failed to hold, and then we lose range lows and then we're taken out, right? So now you don't want to be in the trade because we're probably going to trade down here like this, and that's why a stop loss is important, trade's invalidated, you don't want to be long-sided anymore here. You were wrong. That's fine. That's normal. It's part of trading. You go back to the drawing board, figure out what happened here. Was Bitcoin's at support at the same time? Like, did I ill-time this trade? Whatever, right? That's what a stop loss is for. But it invalidates the trade thesis that you had. And so you just want to give yourself enough room for that to play out. And, you know, if sweeps liquidity here, you still want to be in the trade if we reclaim. You don't want to be taken out because you trying to snipe Pico stops and stuff. You can do that when you become more educated and experienced. But at the start, you're just going to lose money. It's going to mess with your mental and things like that. And so I just suggest give yourself a bit more room. Inside the range, it's normal or logic to take partial profits. Yeah, absolutely. Like 100%. So, you know, I'm looking at this on the high time frame, but like, for instance, if I was in this trade right here and I had taken this, right? Like if price bounces up towards these highs, right? Like I would be taking profit right here. Somewhere in this area, I would be taking profits. Right, that's like a 5% move. That's fantastic. I'm happy with that. That's like a 1 hour trade based on my stop. I'd be taking some profits here, like without a doubt. Same thing over here, right? If I got in here and let's say price, I got in here and price bounced like, you know, again, 5-6% up to here, I'd be taking some profits. You know, price goes up another like 5% into here, I'd be taking profits, and then I'd probably just close the trade here, or, you know, hold 20% in case we break out. Same thing here. If I got short here, right, and we came and we swept these lows out, I'd be taking profit. Like I'd be taking profit somewhere in here, right? We get this drop, I'd be taking profit somewhere in here. Like, you know, even as aggressive as this is, like price is oversold, I'd be taking profit here, and then I'd take more profits here. And like I'd move my stop break even after taking my TP1 on every trade. This trade here, if I got in, you know, I would take some profits here. And then, you know, as this played out, I'd somewhere in here, I would take my profits, and like I'd take more here, even though it went lower. Like maybe I have a little bit, but I might be closed out here. So 100% you should be taking profits like on the way up. Like, don't hold for a 20% move expecting the other side to get tagged, because the other rule inside of a range is you want to be much more aggressive with your take profits and your move stops, because price is very choppy. Now, if you're experienced at ranges, you can understand that we're testing range high and range low, and you can let it run a little bit more, but you still want more than anything to just be aggressive and book profits in a range. So clear this up here. All right, so I'm gonna move on to something else if there's no more questions on ranges. These are all great questions, so, you know, keep them coming if you guys want. I'm gonna show you kind of what to look for in terms of like when Bitcoin's ranging, the right alts to trade. You know, you should be looking for strength versus weakness, and there's very clear things that will show you that, and I'll get into that after. But we'll stay on ranges here if anyone has any other questions. Is XLM in a range? Let's take a look. Yeah, for sure. You can see like here, like right off the bat, right? It's like as you become more experienced, you can see this is a range. We probably have levels. So we don't actually have levels up here. Like we probably have like 2 hour levels, right? So 2 hours, the lowest I would go. I like to do 4 hour and above, but I also do use 2 hours. Like 2 hour levels. So I'm just going to put these on the chart here so that I can show you 898. And then if we go to the 4 hour, right, we have a nice confluent zone at range lows. The 4 hour. And the daily. And so you do have a range here, right? You can just see that price is ranging, right? Like there's something capping price and something holding price. And if we look, you can see this is those levels. Right? So you have a range just like that. So I went through that quick right? Just like mapping that out. But you guys can see how I did that, right? Like I'm looking at the Woodsbot levels and I'm figuring out, right, there's a confluent zone here. So I'm drawing that on my chart because this is clearly where price is bouncing from, right? You have multiple touches, price deviated, came back, held here, right? Like something's holding price here. So I'm finding the levels with the Woodsbot indicator. Same thing up here, right? I didn't mark these time frames, but we have 2 hour. Whatever. So we have 2 hour and 2 hour levels here, right? Either way, you can see range high, range low, slight deviation, reclaim, tests it, pushes up, rejects once, rejects twice, retests it. Very clear, right? I haven't looked at this chart, but you bring it down, you go to the indicator, you turn on the 30-minute divergences. You can see a bunch of 30-minute divergences into this initial range low confluence zone. Now, it wasn't a range at this point, but it was a confluence zone. Beautiful, beautiful triggers for a long. Come up into here, these levels, you had your RSI divergence on the 1 hour. Now, this is where we, what's it called? Let me find so this is where we had a, why can't I think of the word? I'm so retarded right now. Deviation, right? So we started closing below and stuff, and then you got a divergence. So you could have executed on this with a tight stop expecting a reclaim, but it's riskier. But we diverged from here. You can see like, price came down and we closed below. So people thought that the range was going to be broken, but we reclaimed and retested range lows beautifully. So this is a trickier execution here, but you could have tried it. And then you also have, look, we come back into range highs. You have 3 drives of bearish divergence, right? Clear triggers at range highs for a rotation to range lows. So yeah, like definitely in a range, and you can see how I'm just kind of mapping it out, showing you guys exactly what we just went through, using nothing but the Woodsbot indicator to give me range highs and range lows, and then also to look at the triggers of how you could have executed it. And if you want to get better at ranges, just go through like 20 charts in your free time and do exactly what I just did. And if it's confusing, rewatch this part of the video and just, replicate this, and you'll start to see the pattern recognition. You can see that instantly I came in and it's like, I can see this is a range. Find the levels and then look at how you could have executed within that range, basically. Yeah, no problem. No problem, Don Bracco. All right, so now I'm going to show you guys basically like when price action's ranging like this on Bitcoin, right? Some alts will be stronger than others. And right now, there's only honestly 2 or 3 outliers usually in the market. Like Pump Fund's been very strong. ZEC has been very strong. The week before, or the 2 weeks before, Hype was very strong. Sol was strong for a little bit, but there's very clear outliers. And like when price is ranging like this, like you want to be playing the outliers. What you want to do is look for the strong alts when we, test the range lows. You want to be longing the strong alts because they will give massive reactions compared to, typical alts, and I'll show you. And you want to be shorting the alts that are weak. And like, when we deviated this and we came up and we gave the bearish retest, like you want to be shorting weak alts at these points and longing strong alts on these. And you have a lot of time in between these touches to understand and kind of map out 1 or 2 strong alts and 1 or 2 weak alts. And I'm going to show you, like, you can just look on a 4-hour chart and see the difference between something that looks strong, right? Like look at Sol. You can just see we are trending down on Sol, right? This is a chart that maybe you would want to short during this range high test on Bitcoin here, for instance. Because then you look at a chart like ZEC, right? It's clear as day, a strong alt versus a weak alt, right? And this is something you guys should get good at, building a muscle of. Like, look at this chart, right? It's beautiful. This is a extremely strong chart. And look at Sol. They are complete opposites. And these are 4-hour charts, right? This is like 2-week time frame. And so, when Bitcoin comes into range lows like this, you don't want to be longing something like Sol. Like, you're still going to get a move, right? But you're probably just going to get a move into a lower high. Versus longing something like ZEC that is in an uptrend. Right? Crystal clear. Like, what is this? This is July 13th, and I guarantee July 13th, right? Perfect example. Bitcoin rejects range highs, whatever. You don't diddle in the middle, wait for range lows. Now you can play either Bitcoin, or within this 3-day period, you could have just found one or two strong alts that you do want to long when you get the correct range low retest, right? And so you look at these charts and you just have them, whatever, just map them out. Say like weak shit charts and strong Chad charts, whatever it is, just have one or two chosen, and just know mentally that, like, if we're going to be ranging, alts are going to be acting very differently, because typically when we're ranging like this, not always, but Bitcoin dominance may not be the strongest, and alts are running while Bitcoin is ranging, right? Again, this goes into more indexes and understanding those, but just to cover an index real quick, we can see that ETH BTC, which is the strength of Ethereum versus Bitcoin, has broken out of a range, well, not a range, sorry, a downtrend since August 2025. This has been trending down since August 2025 and is breaking out, and it's retesting a crazy big level right now, right? So this is why some alts have been extremely strong, and this is why Ethereum has also been strong. And I'm gonna show you guys something on that after. But essentially, right, to make this point here is like, you just want to understand, and you can do it at a glance, right? Like, you could have no education in trading and understand that this is a weaker chart than this, right? Like, it's very common sense. And so you just want to long strong alts when Bitcoin comes into range lows like this, and you want to short weak alts when it comes into range highs. Like, what is this date? July 15th. Let's look at Sol. I guarantee July 15th, you made your lower high, right? You would have caught a nice move on Sol versus July 15th. Still a nice move on ZEC, don't get me wrong. But, right, it's just, if you only shorted Sol when Bitcoin went to range highs and only longed ZEC when Bitcoin went to range lows, you're in a much more chill position over these past few weeks of ranging, right? Like, you know, everything is a lot less stressful. If you had just planned kind of, you know, one or two strong alts, one or two weak alts, understood on, you know, a higher time frame or ranging, and then just executed within that. And one of the things too, I'm just going to keep going over these things, and then I'll let you guys ask questions and stuff. But one of the things too that really, really, really helped me with trading when I started is building a bias on the day, right? Like, taking 15 minutes of my day when I first start trading to chart Bitcoin, to chart Ethereum, to chart total market cap, look at USDT, just understand where the market is and what I should even be looking at today. Because if you understand that we rejected from here, you know, when we come here, maybe we sweep these lows and reclaim, maybe we don't, whatever, but this is a level of interest, a support zone, a confluence area. Then when we come down here, you can have plans ahead of time instead of scrambling, trying to chase something and things like that. So just build a daily confluence for yourself and kind of like map mentally in your mind where we are in the market. Does anybody have any questions on that? And then I got one other thing that I'll cover before we wrap it up. All right, sweet. So the last thing I'm going to cover is, I just showed you guys the strength in ETH BTC, right? Like this chart here indicating the strength of Ethereum versus Bitcoin. And when Ethereum is pumping, that typically means that alts will be stronger than Bitcoin as well. Now we can look at ETH, and again, you can see that ETH was in a similar range to Bitcoin, right? We had our range lows here, we had a deviation, range highs, right? But due to the strength in ETH over Bitcoin, Bitcoin continued to range where ETH was showing strength, right? This is why you see everyone talking about ETH strength and longing ETH, and ETH looks amazing, is because of this. It's because of this ETH BTC chart, right? Like, these indexes give you kind of maps to the market and what to look at. So you can see that ETH BTC was really strong, and inversely now you can see that ETH has been very strong. ETH broke out of its range, eventually rejected, and now is retesting its range, and it's holding beautifully, right? Like, this is extremely bullish for ETH. You don't want to see it deviate back into the range, because then we would target range lows area. It's holding this, and this looks really good, right? Like, I do think we probably get a move up in the market, especially on some alts. But yeah, just another thing you guys can look at, right? It's just why ETH has broken out, why everyone's bullish on ETH right now is because of that ETH BTC chart. And you can just see the reaction, right? Same range on Bitcoin, but ETH actually broke out of its range and is retesting. ETH is stronger. It's getting more money flowing into ETH inversely, which also is good for alts as well. But yeah, that's kind of everything I wanted to cover regarding ranges and everything like that. So again, if anyone has any questions, if anything didn't make sense, whatever, just let me know now. But I think this was a pretty good educational stream on ranges and kind of like a lot of the things to look for, how to operate around ranges, things like that. Appreciate it, Kirby. Appreciate it as well, Vlad. Good stuff. Ranges are definitely, like I said, one of the most difficult types of price action to trade, but it's also what the markets do vast majority of the time. So it's very important to understand it, you know, build the pattern recognition and strategies around it and stuff to, you know, help yourself be a better trader. Appreciate you, J Pops. Appreciate you, Frock, Mariano, all you guys. Appreciate you coming through too on the weekend, you know, putting in that work as always, asking questions, being involved. We're in a bear market right now, but we're at the tail end of a bear market. So you guys attending streams, you guys asking questions, you guys working on your trading, you guys are going to be the ones who reap the rewards. And like, you know, using the Woodsbot tools and indicator, being early inside of this community, there's so much more coming for you guys. And, you know, this is what it's all about, right? It's like I'm taking time out of my Saturday because I want you guys to succeed. And so appreciate again the questions and all of that. I hope you guys all have a good weekend. And yeah, this will be recorded. It is recorded. And so I'll get that up to you guys and tag everybody in case you want to watch it back or whatever. But yeah, have a good weekend, guys. Again, thank you. And I'll talk to you later.